Hi there and welcome to this edition of Startup Central. I'm Nantara Rai. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption. Basically, if it falls under the aegis of the new economy, it's going to be here on your favorite channel every weekday at sharp 6 p.m. Ladies and gentlemen, like all the stakeholders of the new economy that we get on this show, the team that puts the show together, beg your pardon, the Startup Central team thrives on constructive criticism. Yes, we love praises, but we lap up on constructive criticism. If you don't tell us, who's going to tell us and how we're going to improve, right? So tell us what we should add to the show, what we should remove from the show, how we should mix things up. We love getting your emails. Our email address right on top, suc@etnow.tv. Now, it's turning out to be such a big year for IPOs in India and in fact the world. Look at the excessive liquidity that you have, right? So back home, you've got Zomato, which is expected to list later this week. The upper price band has been fixed at 76 rupees a share. And on Wall Street, the fifth largest IPO of 2021 is being planned. It's going to trade as a scrip hood. I'm talking about Robinhood, with a mission to democratize investments. Robinhood looking at an IPO of about $2.3 billion. It's seeking a valuation of nearly $35 billion. Regulatory filings show that it wants to save about up to 30% of the Class A shares for its consumers. Salesforce wants to buy $150 million worth of shares, and in a really extraordinary move, we can call it a departure from the norm, what Robinhood is planning to do is to have a massive live stream event on Saturday, which is going to have its presentation. This is typically for institutional investors, but Robinhood is doing that for the public. Will that change the IPO rules forever? Will there be a rub-off effect on brokerages back in India? I'm going to be discussing that and more with Nitin Kamath of Zerodha, who's joining us live on today's edition of Startup Central. Nitin, it's always a pleasure talking to you. Thank you so much for joining us today on Startup Central. Let's first begin with Robinhood. Can you tell me, as you know, the promoters and the founders of the largest brokerage that we've got here in the country, how are you folks looking at the Robinhood IPO?
Yeah, thanks. As always, for having me on the show. No, I think it's a great outcome for the founders of Robinhood. You know, I've met them a few times. I mean, it's been a spectacular journey for them, and the kind of disruption in terms of user growth. In the US, it's a lot tougher to grow in the financial space than in other countries. So it's they've taken on some of the behemoths of like Charles Schwab, E-Trade, and etc., and done so well. So it's a really great outcome for the fintech ecosystem as such.
But tell me something, Nitin. I personally found it very interesting that Robinhood, which has this mission of wanting to get be a Robinhood for trading, democratize investments, bring first-time investors on board, is doing away, or at least for now, that presentation process, which is usually for institutional investors. It wants to instead live stream that for all of its consumers, the public at large. Do you think that's going to force the hand of maybe other companies to do something similar?
No, I think Robinhood's story is different, right? I mean, like right from day one, they've been talking about democratizing access. So, if they hadn't done it, it would have seemed off, right? I mean, if they had kept the presentation privy to only to institutional investor on one side, when you're actually saying that you're helping the retail investors do better with the money, right? It wouldn't have come across right. So, I don't think this will kind of set a precedence for everyone else coming with an IPO. But I think it was kind of obvious that they would probably end up doing something like this because at least, optically, it looks quite nice.
So they were valued last at $11.7 billion in September. That was after the last private placement. Now it's, of course, seeking a valuation of $35 billion. Nitin, is this going to have a rub-off effect on brokerages globally? And what about those in India?
I think it's already had its effect because this, while Robinhood is listing now, as in, I think their valuation has been spoken about, privately for a long time now. So I think it's had a rub-off effect on a lot of brokers who are raising money across the world. Revolut just raised money at, I think, $30 billion plus. Revolut is a very similar Robinhood type of broker, but which also is like a neobank based in Europe, who's raised money privately at, I think, $30 billion plus. So no, there is, I think what has happened in the last 1 year is the growth has been just phenomenal, right? As in for broking firms across the world. And a lot of investors are somehow, I think are disillusioned, according to me, that the growth at the same pace will continue, right? I think it's very tough to grow at the pace at which we grew last year. If you look at the last quarter for Robinhood and across all the new age brokers, I think the growth has kind of started plateauing. So it's very tough to kind of get such kind of high valuations in an industry like broking, where the volatility of the markets can potentially cause your users to go up and down significantly. So it isn't as predictable as a lot of other industries as such.
Nitin, I'm just going to ask you to hang in there for 1 second. If you're also watching us on live stream, I want to bring our viewers the live images that we're getting. It's that historical Blue Origin flight with the richest man on this planet getting set to conquer space as well, in tow with his brother and best friend Mark, as well as 2 others that are part of the crew. They're going to go beyond Sir Richard Branson, beyond the edge of space. They're, of course, marking it on the anniversary of Neil Armstrong, when he said a large leap for mankind. So we're bringing in the live visuals there. Remember, Blue Origin is also live streaming it. So there you go, ladies and gentlemen. That's what's happening for you at the moment. It's a story that we will be continuing to stay with on ET now. And we'll every few minutes get you the visuals from there because, let's face it, it is a very historical development as well. Nitin now in Robinhood. So Nitin, you made it clear that it's quite difficult to kind of see the kind of growth that you saw in 2020. So now everyone's base has changed, right? Do you want to tell us a little bit about what Zerodha is going to keep doing to stay as close to that growth rate as possible?
Yeah, no, I mean, the thing is, as a business, the best you can do is do what is right for the customer, right? And it's very tough to control outcomes, especially in an industry like ours, where or your fortunes are really dependent on what the Nifty does, right? And so as long as the index, the stock markets do well, they are an outperforming asset, I think there will be interest to come invest in the markets. India, the market participation, even after the surge we have seen in the last 1 year, I think there are maybe between 2.5 crore to 3 crore Indians who have an investment, right? That's across mutual funds and stocks. And potentially that market size is at least 2 or 3x. So there's still opportunity to grow the market in terms of users. I think what India really requires is, a lot of these users are first timers. So I think it's important for platforms which are onboarding these users to help these folks do better with the money, right? As in not just in terms of education, but also more in terms of ensuring that most of these people don't do, like mistakes that a lot of beginners can potentially make. So our focus right now as a business is most of our new initiative is around helping people avoid mistakes. And then these mistakes, in the business of money, it's just not the newcomers who make these mistakes. A lot of old timers also end up making the similar mistakes because in this, when you're in the influence of fear and greed, the chances of doing mistakes are a lot higher. So that's really our focus. And how much can the business grow? That's really I don't know if we can really control on that.
Okay, so that's Robinhood. But Nitin, I also wanted to talk to you about the other big event. I know I discussed it with you about a fortnight ago when we had you live on the India Development Debate at 9 p.m. But today on Startup Central, this is the week that you're going to see Zomato list. The expectation is it's going to be on Friday. Tomorrow, of course, is a market holiday on account of Eid. But the price band, no guesses, surprises there, fixed at the upper limit of 76 rupees a share. That means Zomato's valuation skyrockets to $8.7 billion. Its arch rival Swiggy has done a $1.25 billion fundraise. It's from the private markets. That's valued at about $5.5 billion. Nitin, it's been seen as a historical event. You know, the first loss-making unicorn, hyper-growth company that's listing on the Lal Street. Look at the response. What did you make of this IPO?
Yeah, no, I was just having a word with someone, and see, the thing is, this IPO, the retail really, the retail allocation was like what, 10%, right? As in, it's mainly institutional, right? So I think there is demand there, right? As in, there is institutional demand for hyper growth companies, because today, if you look around the world, be it Robinhood, be it whatever, right? And be it Tesla, be it whatever, as in, they're not really valued on your traditional metrics of price to earnings and things like that, right? As in today, most businesses are getting valued based on growth. So for institutions to be able to access these hyper growth companies, I mean, I think Indian institutions especially have missed out on this entire Indian startup ecosystem space, right? Because most of the people who have benefited out of this are generally been outside money, right? As in, there have been VCs and Ps who have kind of rode this wave in the last 10 years. And looking at the demand and oversubscription, it's kind of evident that there's a lot of appetite for hyper growth companies. I know Zomato comes with risk that it's more than maybe fairly valued, but as long as they can continue growing fast, I think they'll continue to see a lot of demand from institutional investors and maybe retail investors as well. As and when the stock can perform well, there will be demand from everyone essentially, after listing.
Okay, so staying with Zomato, I mean, I remember the regulatory filing came in. 186 institutional investors are going to be given allocation. The names ran into 13 pages. You had like so many FIIs, DIIs, but also the likes of Tiger Global that have participated. So do you think, is this typically how it works worldwide, at least as far as these unicorns and new age companies go?
Yeah, no, I think like if I had to look at it, if you looked at all the institutions taking part, right, as in wanting to take a part, it almost felt like it's a international listing and not an Indian listing, right? Because while the venue is India, but I think the demand is so institutional. I don't know if all startups are going to see similar kind of demand from institutions, but Zomato for sure had a lot of demand, from the institutions.
Okay. And as far as the retail investors go, Nitin, would love to get you on that as well. Look at the kind of subscriptions that you've seen. On day one itself, the retail investor book was fully subscribed. But, in the days and weeks and months to come, you're going to see the likes of Paytm, Policy Bazaar, Delivery, Nykaa, many more that are going to be hitting the Lal Street. According to you, what is it that retail investors should look for? Everyone says change your lens, don't look for EBITDA and all of that. But all of these companies are dreaming big. All of these companies have massive plans. How is a retail investor supposed to be discerning?
Yeah, no, I think the way to play this out, is really portfolio allocation. I think maybe 5 to 10% of your portfolio, you can say I allocate it to high growth businesses. Because the high growth businesses actually come with a lot of risk as well, right? Because as soon as if the growth isn't met, the stocks can see great amounts of haircut. So I think like a retail investor maybe allocates 10% of the portfolio for such companies and picks up the ones he understands well, so and he aspires to own as a brand, etc. Because just based on valuation, it's almost it's very tough to kind of say who's which of these IPOs or stocks you should be investing on, because all of this growth is based on a certain growth, and growth is for future, right? And so you almost have to predict, if a lot of these companies can match up to the growth that they're saying they can hit in the future, right? Because a lot of that growth is also not in the control of the companies, right? As in, we all live in a world where, and we've learned this last year, right? As in, things can go wrong very easily. So the right way to approach this for any retail investor is portfolio allocation. Take a small, you need to have some exposure to high growth stocks, because, they tend to kind of, have been giving great returns as well. But keep the portfolio exposure, to a small portion, so maybe 10%, maybe 10, 15% at max.
Okay, 10 to 15% max is what you're suggesting. But Nitin, I don't mean to put you in a spot there, but there have been a lot of articles that have been coming out. That one good way to maybe spot a winner with so many of these IPOs being planned is to go in for the ones that maybe have a monopoly or a duopoly. Would you agree with that thesis or that argument?
Like in every tech business today, there is monopolies and duopolies kind of come with a valuation premium. Right? Because, you see, in the business of money, what you and me know, probably everyone else knows also, right? So being a monopoly, duopoly definitely is preferable. But, if it's a monopoly, duopoly listing on the exchange, that means it also already comes with a valuation premium, because all their previous investors would have already given that premium because they're a monopoly or a duopoly, right? So like I said, it kind of improves the odds, maybe slightly, of that investment doing well. But the problem with monopolies and duopolies is that, regulators don't like monopolies and duopolies. So you tend to, in such a structure, you tend to also have, the issue of a regulatory risk, some regulation changing, fearing that it's a monopoly or duopoly. So.
My final question to you, Nitin, before I let you go, when you saw the Zomato IPO subscriptions, particularly on your platform, did you notice any interesting trends? Like, were they mostly first-time investors? Were they younger? Were they from the metros? Were they women? Age? Any interesting insights?
Yeah, see, the thing is, the customers today that we cater to are generally younger. So the average age of of our customers is like around 30 years. So it wasn't, it isn't like, there was any specific trends as such. Today, that man, woman accounts, it's very tough to predict anything there, because a lot of times women accounts are managed by fathers and brothers and husbands. So it's, looking at that data, you can't really figure if it's really the woman whose account belongs to is the one who's actually transacting in it. There's unfortunately nothing interesting that we've been able to pick up on that.
Okay, Nitin, it's always a pleasure talking to you. Thanks so much for joining us live on this edition of Startup Central. Appreciate you taking the time out.
Thanks.